Stop scrolling for a second and really let this sink in. If what I'm about to walk you through is even half true, then XRP is not just another altcoin anymore. It's the quietly preloaded software update for the next version of the global financial system. And the insiders may have just tipped their hand in the most reckless way possible. Welcome back to XRP Insider Network, the channel where we break down the rumors, leaks, on-chain footprints, and institutional breadcrumbs the mainstream doesn't want to stitch together for you. If you're new here, smash that like button right now, hit subscribe, and turn on all notifications so you never miss the drops that others only talk about weeks later. Because today's story could age like one of those "I was there before it happened" moments people brag about for years. So let's dive straight into what I'm calling the XRP liquidity lockdown blueprint, because this is the closest thing we've ever seen to a coordinated, multi-pronged accumulation strategy hiding in plain sight. First, let's start with what everyone thinks they already know. The Ripple versus SEC war is over. The appeals are dropped. The fine is locked in. And for the first time in almost 5 years, XRP has regulatory clarity in the United States. That alone would be huge. But here's where it gets suspicious. Within months of that legal fog lifting, we suddenly get a wave of spot XRP ETF approvals, with the first one launching and smashing 2025 records on day one, pulling in hundreds of millions in volume and inflows like it was nothing. And now we're watching a 15-day streak of net positive inflows, driving these funds toward the billion-dollar mark in what feels like the blink of an eye. That's not random interest. That's a pipeline being opened. Those ETFs mean something very simple. For the first time ever, the biggest pools of US retirement and brokerage capital can get XRP exposure through fully regulated vanilla Wall Street products. 401ks, IRAs, pensions, all able to touch XRP without ever going near an exchange or a self-custody wallet. And here's the kicker. As those ETFs grow, they have one job: go out into the market, buy XRP, and lock it away inside a regulated wrapper where coins basically go to sleep for years. That's step one of the liquidity lockdown. Now combine that with something that barely hit mainstream crypto headlines. Vanguard, the conservative giant that literally refused to let clients buy any crypto ETFs for years, has suddenly reversed course and is now allowing its massive user base to access Bitcoin, Ethereum, and yes, XRP-linked products through its brokerage platform. That is not the move of a company experimenting with crypto. That's the move of a firm that can see where capital is flowing and realizes if it doesn't open the gates, its clients will walk. But for us, the signal is even bigger. Vanguard's decision means the XRP ETF pipeline is no longer a niche thing. It's plugged directly into one of the largest traditional investor bases on the planet. So while most people are watching meme coins on TikTok, index fund boomers and conservative advisors just quietly got a green light to route serious capital into XRP exposure without ever learning how to spell on-chain. Now pause and think about that. You've got multiple spot XRP ETFs hoovering up supply. You've got Vanguard opening the door to them. And all of that is happening right after legal clarity. Do you really think that timing is accidental? If you're still with me and this is connecting some dots already, drop a comment right now with XRP liquidity lockdown so I know you're one of the ones who sees through the noise. And while you're down there, hit that like button because it tells the algorithm this is the info retail actually cares about, not the distractions. But here's where it gets truly wild. While those ETFs are quietly doing their job, Ripple itself has been on an absolute tear behind the scenes. In 2025 alone, they locked in what's being reported as their best year ever in payments volume, tens of billions in flows. And then out of nowhere, we get news that a who's who of Wall Street killers just wired Ripple roughly $500 million at a sky-high private valuation around $40 billion. We're talking names like Citadel Securities, Fortress, Brevan Howard, Marshall Wace, Pantera, Galaxy, some of the most aggressive, data-driven players in modern markets. These aren't tourists. These are the guys that front-run trends, build market-making machines, and mercilessly arbitrage inefficiency until retail is left holding crumbs. So ask yourself, why would that caliber of player write 9-figure checks into a company that just spent half a decade being sued by the SEC? Unless they've seen enough to believe that XRP's role in the future financial plumbing is not just intact, but about to scale. And then we zoom out further, and it gets even more suspicious. Ripple is now openly positioning itself as a hybrid payments plus stablecoin powerhouse. They've got their own dollar-pegged stablecoin RLUSD. They've got a global network of banks, fintechs, and remittance firms integrated into RippleNet and the XRP ledger, and they've quietly processed over $90 billion in payments in a single year, while most of crypto was still recovering from the last blow-up. Big Wall Street money doesn't care about narratives. It cares about throughput, fee capture, and regulatory green lights, and Ripple suddenly checks all three. But if that's not enough to make you raise an eyebrow, here comes the part that feels straight out of a playbook. Ripple-backed Evernorth, a new vehicle heading toward a US listing via a SPAC merger, whose explicit strategy is to become one of the largest publicly traded XRP treasury firms on the planet. Translation? A dedicated listed company whose core mission is to hold XRP at scale, backed by the same network of Ripple-aligned investors, with over $1 billion expected to be raised between equity and commitments, all aimed at one thing: accumulating and managing XRP as a strategic asset. Read that again. Spot XRP ETFs, absorbing supply for passive exposure. A Ripple-backed public vehicle hoarding XRP as its primary treasury asset. And Ripple itself, flush with $500 million in fresh Wall Street capital to double down on acquisitions, liquidity, and infrastructure. This is not a meme pump. This is a structural lockup. And while this machine is being built, Ripple executives repeatedly say they have no plan, no timeline for a traditional IPO, almost like they're deliberately avoiding the pressure of public quarterly scrutiny while they rearrange the chessboard in private markets, backed by the most sophisticated money in the game. Let me ask you, as an XRP Insider Network viewer, if you were trying to quietly consolidate control over a strategic asset that powers cross-border settlement, tokenized value flows, and even a stablecoin ecosystem, would you rather chase a flashy IPO or quietly build a network of ETFs, treasury vehicles, and private financing that lets you lock down float in 10 different ways while the public still thinks XRP is just that old 2017 coin? If this is hitting you in the gut and making you rethink how early we still might be, do me a favor. Pause the video for half a second, smash that subscribe button, and turn on all notifications. Because what we're about to cover next is where the leak energy really comes in. How this whole structure sets up a scenario where a future shock, liquidity crisis, currency devaluation, or regulatory shift could flip XRP from speculative token to preferred institutional rail almost overnight, while most of the liquid supply is already spoken for. All right, let's zoom into the endgame scenario that a lot of people aren't even thinking about. Picture a world where global markets are already wobbling, debt levels are insane, currencies are under pressure, and regulators are desperate for ways to keep capital flowing without blowing up the banking system again. In that environment, settlement rails that can move value instantly, 24/7, across borders, with clear regulatory status and institutional plumbing already in place, suddenly go from interesting tech to systemically important infrastructure. And what do we have sitting on the table at that exact moment? A fully battle-tested XRP ledger, RippleNet corridors humming in the background, a US legal framework that has already fought its XRP war and moved on, a suite of spot XRP ETFs holding billions in professionally custodied coins, a publicly traded XRP treasury company with a mandate to accumulate, and one of the world's biggest asset managers quietly giving its clients the green light to plug into all of it via ETFs and funds. You don't need a wild imagination to see how that becomes the backbone of a new cross-border liquidity layer, especially if dollar-pegged stablecoins like RLUSD start integrating more tightly with XRP liquidity pools so that value can jump seamlessly between fiat, stablecoins, and XRP as needed. The insider leak angle isn't that there's some secret document saying XRP replaces SWIFT on Tuesday at 3 p.m. It's that the infrastructure, the legal clarity, the market wrappers, and the capital are all being wired together right now in ways retail only notices after the move is basically locked in. Remember how everyone laughed at ETFs before Bitcoin's spot ETF approvals, and then watched trillions flow in while supply on exchanges quietly drained? We're looking at that same playbook, but with a twist. XRP has a payments-first DNA, a live institutional network, and a settlement speed that makes traditional rails look like dial-up. When you run that through a Wall Street brain, the question isn't, is XRP cool technology? It's, how much of this network can we own before the rest of the world figures out what it's really worth? That's why here on XRP Insider Network, we keep telling you, always pay more attention to structure than headlines. Structurally, this moment is different. You've got clarity where there used to be chaos. You've got regulated wrappers where there used to be risky offshore exchanges. You've got Wall Street capital and conservative giants like Vanguard capitulating to demand. And you've got Ripple refusing to rush into public markets, instead reinforcing its moat through acquisitions, partnerships, and strategic investments that all deepen XRP's role at the heart of their ecosystem. Now, does that mean XRP is guaranteed to moon tomorrow? Absolutely not, and anyone promising that is selling you a fantasy. We don't do that here. What we do is read the map. And right now, the map says, there is a coordinated, multi-channel absorption of XRP supply into vehicles that are designed to hold long-term, not trade in and out like retail gamblers. That's the kind of thing that only matters in two scenarios: when adoption quietly scales in the background, or when a shock hits the legacy system and everyone scrambles for alternative rails at once. In both cases, the people who understood the structure early are the ones who don't have to chase candles later. So here's how you can actually use this information without falling into hopium. First, stay curious and verify everything. Dig into the ETF filings, look at the actual inflow data, follow the money around Ripple's funding rounds, track Evernorth's listing progress, and read what institutional players are saying between the lines. Second, think in systems, not tweets. Whenever you see news about a new corridor going live, a bank partnership, a new ETF approval, or a regulatory shift, ask yourself, how does this change the plumbing? Does it make it easier for big money to push value through XRP rails, or harder? Third, stop anchoring your expectations on the last cycle's price action and start thinking about what it means for an asset to graduate from speculative token to critical infrastructure. Prices can still be violent and irrational, but the underlying thesis shifts from will this survive to how big can this get? And finally, keep your emotions in check. Yes, it's tempting to see words like Citadel, Vanguard, ETF, and billion-dollar treasury, and immediately jump to insane price targets. But the real flex, the real insider move, is staying level-headed, managing your risk, and positioning yourself so that you don't need to FOMO when the rest of the world finally lines up at the door you quietly walked through months or years earlier. If you've watched all the way to this point, you're already ahead of 99% of the market, and I want you to prove it. Drop a comment below with, I see the structure, so I know you're one of the few actually connecting the dots, not just chasing headlines. And don't forget, if this breakdown of the XRP liquidity lockdown hit you with at least one, wait, what, moment, slam that like button, subscribe to XRP Insider Network, and turn on all notifications so you never miss the next deep dive. Because in upcoming videos, we're going to unpack individual ETFs, track Evernorth's XRP treasury moves, and analyze how new regulations and payment corridors could tighten this liquidity trap even further. As always, this is not financial advice, just one crazy XRP nerd connecting the pieces and sharing the view. Stay sharp, stay skeptical, and stay early. I'll see you in the next one, right here on XRP Insider Network.